Hello everyone, this is Vincent Verga, President of PFS Wealth Management Group with your educational economic update for May 2017. In this month's video, we're going to share with you some of the major headlines that influenced the markets in April, as well as a few first quarter reports. We truly hope this information will offer insight into what these developments might mean for you as an investor. We ask that you please stay tuned, though, at the end of this video for our required disclosure statement. Well, data for consumer spending, which accounts for about more than 2/3 of the U.S. economic activity, was included in the first gross domestic product report that was released on April 30th. It showed consumer spending increasing by 0.3% annual rate, which is the slowest pace since the fourth quarter of 2009. And the economy grew by 0.7% in the first quarter, which was the worst performance in 3 years. Personal consumption expenditures, or PCE price index, excluding food and energy, slipped 0.1%, the first and largest drop since September 2001, after increasing 0.2% in February. In the 12 months through March, the core PCE price index increased 1.6%, but was the smallest gain since July 2016, after advancing 1.8% this past February. In the market, April ended with a strong monthly gain through U.S. equities closed lower on Friday, April 28th, when the Dow slipped about 40 points and the S&P fell 0.2%. The Nasdaq, though, the composite, hit a record high before closing slightly lower. It's important to note that the three major indexes posted a monthly advance for April of about 1%. The S&P and Dow posted their 5th positive month in 6, while the Nasdaq recorded its 6th straight monthly gain. Most of those gains came from the last week of April, when stocks posted rapid rallies as corporate earnings season kept revealing strong performances from top global companies. Speaking of earnings season, which are those months in a year when most quarterly corporate earnings are released to the public, this one has been strong so far, with Apple, Facebook, Tesla, and BP all reporting. More than 75% of the companies were surpassing profit estimates, and about 70% were beating sales forecasts at the end of April. Experts say that the number of companies topping profits and sales estimates this first quarter was above the 5-year average. And this really becomes an issue, right? People are wondering how quarterly corporate earnings are strong while our economy expanded in the first quarter of this year at its slowest pace since 2014. Well, robust global growth is making up for the lack of domestic activity. Analysis shows that the more businesses a U.S. company does overseas, the better its results. About 46% of the S&P 500 sales overall came from foreign markets. S&P companies that earn more than half their revenue overseas are seeing earnings growth that is twice the rate of companies that do mostly domestic business. In the coming month, we're going to be expecting more key economic data to be released, including the U.S. jobs report. Additionally, the Federal Reserve's Policymaking Committee will meet in early May, and it is expected that it will hold rates steady. And while lawmakers reached an agreement on April 30th to keep the government funded until the end of September, well, the full House and Senate must still approve this bipartisan pact sometime this month in May. Ladies and gentlemen, sorry to say this is it for this month's educational economic update. We hope that you found value in the information we share, and we'll look forward to seeing you next month in June. Once again, this is Vincent Verga, President of PFS Wealth Management Group, signing off for the month of May. Please remember that nothing we talk about here is a recommendation. If you'd like to discuss your personal financial situation, please give our office a call at 888-331-2821. We'll be happy to talk to you. And make sure you visit our website at pfswealthgroup.com. Bye now, we'll see you next month.